So, welcome to our December webinar Lunch and Learn for Financials for Small Businesses. Um, First, I would like each of the panelists to introduce themselves, what business they are with, and how long they have been with that business. And we'll start with Sydney.
I'm Sydney Schaefer with Black Hills Federal Credit Union. I am a business lender. I have been with the credit union since May of this year, but I have been in banking for close to 7 years now.
Cheryl.
Hi, I'm Cheryl Scow. I own an accounting firm which specializes in managerial accounting. Been doing it for about 30 years now and have my own practice with my daughter.
Amanda.
I am Amanda Anglin. I'm the executive director of the Sturgis Economic Development Corporation, and I've been with the organization for 7.5 years. I do have about 15 years of experience working with local governments and in the economic development field.
Great. Well, I'm going to just kick off the questions and then each of you can answer if you have an answer, or if you don't, we'll just go to the next question. But we kind of have questions that pertain to each of your fields. So the first one is very general. What are the top financial mistakes you see small businesses make in their first couple years? We'll go the same order. So Sydney.
Okay, I've got a couple for this one. I would just say limited knowledge on how to prepare financial statements or using systems like QuickBooks. And if you don't know those systems or that knowledge, not hiring a bookkeeper right off the bat to track your monthly income and expenses. Secondly, from the banking standpoint, I would say not having enough cash reserves. I think a lot of small business owners think that they will get 100% financing on either equipment or real estate. But a lot of the times the case is that you've got to come in with some money down that can range from 20 to 30%. And then I guess my piece of advice for this one is just to establish right out of the gate a good relationship with your banker, an accountant, and potentially a lawyer if you're doing any acquisition and things like that.
Cheryl.
Sure. So my couple are, number one, as a small business owner, you have to put time in. You cannot expect to start a business and only have employees doing all of the work. It's a recipe for disaster. And with being a small business, there's just not enough cash flow there, and you have to be willing to put the time in. And if you are, you'll see the rewards further down the line. And I would also agree that you have to have enough cash reserves to be able to get through, a few months of a rough patch.
I would just echo what Sydney and Cheryl said. Having cash available to operate your business as well as keeping track of your expenses. That's really important.
Before we move on, I forgot to mention this, but if anyone that is attending has any questions, they can put them in the chat or send them directly to me, and I will ask them throughout the presentation. The next question is more accounting and bookkeeping focused. So, what expenses are most commonly missed or miscategorized by small business owners? We'll start with Cheryl.
Okay, I would say probably anything that you would pay out of your personal bank account. Sometimes they will forget to give them to me, and then 8 or 12 months down the line, we'll be going over things and say, well, geez, I don't really see any things for insurance. Oh, well, the insurance comes out of my personal account. Or, yeah, I've just been paying, whether it's telephone or phone or auto or any of those things. I think that's one of the, subscriptions, those type of things get often missed because you just keep them on a personal card and you need to segue them over to the business.
Amanda?
Oh, I'll pass on this one.
Okay, Sydney?
Yeah, I'll leave that one to Cheryl as well.
This one is also accounting focused. So, Cheryl? You are up again.
Okay.
What are the benefits of hiring a CPA versus doing bookkeeping internally?
Okay, so thank you for asking. This is one of my main points on how I sell myself. It's important to have both. You know, bookkeepers and accountants are more detail focused on your managerial, your monthly accounting. And we need to start that from day one or even before you're open. Because once you're open, you're not going to have time to sit down, you know, and meet with your managerial accountant to go over things. So it's important to get the balance sheet populated, you know, with any loans, anything that you have with that right off the bat. CPAs, of course, are more focused on tax strategies, which a lot of times the accountants don't see that side of it. You know, we only see your business side, we don't see your personal side. So it's important to have both. Also, an accountant or a bookkeeper is probably 2 to 3 times less per hour than a CPA. And most CPAs don't like doing book work. They won't do it, so they turn it off to, you know, someone who's making $15 an hour being data entry. So you're not really getting what you need.
Do you two have anything to add to that?
Yeah, I would just comment that if you're going to be looking at financing or utilizing some programs for it to help your business, you're going to want to have a good set of financial documents to share. And Sydney may comment more on this, but uh, my organization will look at financials and we want to see something that's prepared by a CPA or your bookkeeper to ensure that, you know, there's accuracy there and it gives a good picture of the business.
I guess I'll just add, I think the monthly bookkeeping is overlooked a lot. I think you have the business owners that are thinking, okay, I need to get my taxes together, but
Mhm.
I think hiring a good bookkeeper to keep you in line and organized throughout the year is going to save you more money, I think, down the line, instead of having to undo a whole mess that was made because you weren't prepared with a bookkeeper. And then your CPA is going to look at you and wonder what the heck was going on. So I definitely think bookkeepers are overlooked right out of the gate when you're opening your business.
Okay. The next ones are more banking focused. So Sydney, these are not kind of questions. What are the signs a business might need a line of credit versus a traditional loan?
So lines of credit are essentially to operate. If you're slow on receivables and waiting for those to come in and you got bills to pay, payroll to make, that's when your operating line comes in. Traditional loans would be your refinances, purchases, potentially real estate, and those are monthly principal and interest. Those payments are normally fixed. They're the same. Whereas lines of credit, those payments change depending on what the balance of the line is. Interest only payments are made. I would say on lines of credit, those are traditionally 12 months, whereas your term notes can, depending on what it is, can go 3 to 5 years, up to 20 years for real estate. So that's the main difference between those two.
Do you guys have anything else to add to that? Okay. What should small businesses know about interest rates and how they are determined?
So there's a lot to this one, I would say. So there are a lot of factors go into determining interest rates. They're different depending on whether it's a vehicle purchase or a real estate purchase. I can kind of go through a little bit of both of those. So equipment and vehicles, those are fixed, typically fixed rates, and they're the same throughout the whole term. It normally those are based on year and mileage, and I would say the average term of those loans again are 3 to 5 years. And if we're switching over to real estate loans, those are typically variable rates that are based on Federal Home Loan Bank or the Treasury. And those usually vary every 3 to 5 years. And the max term on those loans can go anywhere from 15 to 20 years on average. And then I guess lastly, I'll touch on lines of credit. Those are essentially most often, I would say, based on prime. and they adjust typically monthly. And the term of those loans are 12 months, just because they need to be reviewed annually. Obviously, the condition of the business plays a role. The risk plays a role in how we price loans. So lower risk loans likely have a lower interest rate. So that's kind of the difference on those types of loans.
You guys have anything else? Okay. The next couple questions are primarily Sturgis economic development focused or economic development in general. So what types of funding or initiatives are available locally for small businesses?
So, as far as locally within Sturgis and Meade County, SCDC has a revolving loan fund. And what we use those funds for is to help with businesses either for some startup funding or equipment purchases. It could be a variety of options. What our philosophy is that we are not going to take the place of any lenders in our community. We want to partner with them. So we always ask that our businesses work with the bank where they have the relationship, and then figure out what the project cost is going to be, and then where the sources and uses are going to lie, and then where the need is for additional financing. So we want to come in and help fill the gap. That's how we utilize our revolving loan funds. And we usually take a look at the entire picture of what the business needs, and the amount. Our interest rates currently are just a set interest rate at 5%. And what we do is try to have a little bit lower of an interest rate because typically the banks are a little higher. So then we can help provide a little bit of relief for the businesses, especially in the startup phase as they're trying to get things rolling. Another incentive that we have within Meade County is a property tax abatement, and that comes from the county. So if any business is looking at new construction or renovations over $30,000, there is a tax structure that goes along with it. So the first year, you would only pay 20% of the total assessed value of the taxes. And then each year it goes up 20% over 5 years. So 20, 40, 60, 80. And then by that fifth year, you're at 100% paying the taxes. That's another incentive that helps small businesses get started. And then there are other organizations at the state level, regionally, and then that offer other programs that can help as well. Like the Governor's Office of Economic Development offers different lending programs, as well as the Department of Labor has some things to help with costs for employees. And so what we do is just take a look at what the need of the entire project is, and then we can kind of help direct the business to the right resources.
Do either of you two have anything else to add to that?
I don't know, Amanda, if you want to touch on the SBA programs as well. Those are great. They usually lower rates, longer term, less down payment. 504 program is a good one.
I
And
don't
then,
I don't deal with those a lot. So Sydney, if you have some knowledge of that, go ahead, please.
yeah, that's just one that we typically look at right away. A lot of startups have a hard time coming in with that down payment. And so the main, I would say, incentive there to work with the SBA is just a lower down payment requirement. You do work with the government, so it's a little bit more paperwork, but I think in the long run, it's worth it.
Next question is, how can SEDC support a new or expanding business in the Sturgis area?
So we offer kind of like a one-stop shop in our office. And so businesses can call us and we provide a variety of services from, as I mentioned, our revolving loan funds, but we just take a look at what the business needs and then try to direct you to the right resources. So that could be somebody looking to they have an idea, but they haven't quite moved forward with anything yet. So sending them to the Small Business Development Center to start their business plan process. That service is free. You shouldn't ever have to pay for a business plan. There are a couple different organizations in the Small Business Development Center, as well as South Dakota CEO, that do that planning for free. So we connect businesses there. SEDC has an industrial park as well as an incubator space that we can utilize to help businesses. We own buildings as well, so we have space that we lease out to businesses to help them get started or expand. We do sometimes offer networking opportunities for businesses similar to the chamber. We don't try to mimic their events, but we try to do different things such as small business classes or other events that help bring our businesses together. Myself in my position, I attend different trade shows and different conferences and things to try to just gain knowledge and market our community to help our businesses. And then we can also provide different data for businesses depending on if there's something specific that they're looking for that might help.
Okay. I guess you guys probably wouldn't have direct experience with this, but do either of you have any experience working with an economic development and helping a small business connect with them at all?
I mean, every time a brand new business comes in looking for a loan, we don't have much to go off because there's no history. And so that's our first goal is go get a business plan and projections put together. So and again, the SBA needs that too if we decide to go that route. So there's two individuals I believe in Rapid City that come to Sturgis and Spearfish. And they sit down and help you put those together. They're very knowledgeable on what they do.
Next question. What makes a strong business plan when seeking economic development support? And I'm gonna change this one a little bit to any support, banking, anything like that. Like, what is your experience with it, Amanda?
Yep. So as I mentioned, we have the Small Business Development Center located in Rapid City, and they do a great job helping people put together a business plan. They won't do all of the work for you, but they will set you up with what you need to succeed with a business plan. And in my experience, most lenders, and especially SEDC, prefer to see that business plan come from the Small Business Development Center because we all know that it's a thorough product and we trust the people who are there to help vet your idea and make sure your numbers are well put together. And they also have access to data that can help you shape that business plan. So a couple different items that we like to look at on the economic development side is your business plan idea, what you're trying to do, your target markets, and the service you're trying to provide to the community. We also look very heavily at the financial projections and then the job creation numbers. So the positions you have within your business, what the salary and benefits packages are going to be, and then how you're going to use any funds. Do you need any loan funds or any assistance in any way, and making sure that that's all laid out in your business plan.
Daryl, do you have anything to add for that one?
I don't think so.
Sydney?
Nope, I think Amanda did a great job.
Okay, next question. This is more about like cash flow and operations. So, how can businesses balance growth with maintaining healthy cash reserves? And we'll start with Sydney for this one.
Well, if I just look at from the banking side, that might be where your operating line can come into play to help with that. And I mean, if some people like to keep cash on hand, so if they can afford a vehicle, outright in cash. Sometimes they finance it to keep those balances and keep the cash in the account in case things come up. Those are the main two things I think in the banking side.
Cheryl?
I would just add to that that it's, it's good practice to have at least one payroll in reserves, if not two. That way you're not scrambling around every, couple of weeks going, oh my goodness, payroll's tomorrow and I'm short.
Amanda?
No.
Anything? Okay. Um, what is the best way to forecast cash flow for the next 6 to 12 months? And we'll start with Cindy.
Well, I think looking at your historical trends will go a long way, and then seeing what kind of upcoming jobs that are coming up can greatly forecast what your cash flow is going to look like. For new businesses, obviously go to the SBDC to get those projections and all that put together.
Cheryl?
I would just say with, whatever your type of business is, there could be some seasonalities that you can look at as far as, trends, kind of on top of that and just, yeah, trends, seasonal.
Amanda, do you have anything to add for that one?
I don't.
Next one, what key financial indicators should small business owners track monthly? I'll start with Cheryl for that.
So your P&L, of course, which gives us our measure profitability, the balance sheet, which assesses financial health, because that's your assets, your liabilities, and your owner equity. And then your cash flow activity, which is really basically it's just the old check register days where you used to write things in your check register. That's basically your cash flow. Where's your money coming from and where's your money going to? It's just really important that every month, at least once a month, you pull those reports and see where you're trending, as well as your accounts receivable and your accounts payable.
Sydney?
I have nothing more to add to that one.
Okay. Amanda?
No.
Okay. Next one. How can a business know when it's financially ready to grow or expand? And we'll start with Amanda for that one.
I guess I would say that keeping good track of your financials is going to help you make that determination. I think otherwise you're going to have to look internally at your business and what your needs are, and then maybe potentially work with the Small Business Development Center again there to help maybe with the forecasting of how you need to grow, and possibly your lender as well, to look at what maybe financing you might need in order to accommodate that growth.
Cheryl?
Yeah, so that's a really good question. And I think it's a lot of times owners really don't know the answer to that. And a lot of it is, internal. You can look at your current employees. Do they have time where they can, add to their duties that they have now? If they can't, then okay, well, we're gonna have to hire another employee, which that could, be a huge cost associated with that. So, just deciding whether you want to get bigger or whether you want to stay where you're at. It's a very important decision. It's a very big decision. And just know that it's not always better to get bigger. Sometimes it's better to keep plugging away and getting better and more efficient at what you're doing before you expand.
Sydney, do you have anything to add?
Just if the demand is there for your product or service, first of all, and then secondly, just evaluate your finances to see if the cash flow can withstand that growth.
Um, The next question is, what bookkeeping practices should every small business implement from day one? We'll start with Cheryl.
Yeah, so one of the most important is, and I had mentioned this before, setting up your accounting software ASAP. There's no need to wait, let's get it going, because most likely if you don't have, your licenses yet, you're paying quite a bit of things out of your personal account. And so the best way to track those is to get your accounting software set up. Also, a mistake would be to make sure that we separate any personal banking from the business banking. And commingling is always seems to be, a problem, and it's better to get set up straight from day one than to try to unravel it later.
Amanda, do you have anything to add?
I wouldn't. I would just echo the importance that Cheryl said of having everything set up from day one. It's just going to be easier.
Sydney?
On the banking side, I will tell you that it won't get very far if you don't have those softwares implemented. Going and telling your banker to look into the checking account to see what your income and expenses are, that doesn't go very far. We need a P&L and a balance sheet typically when you're coming to borrow money. So we don't track checking accounts for income and expenses. So we need you to kind of have that together for us.
Also, I'd like to add, one of the biggest mistakes owners make sometimes is they look at the health of their business by what, the balance of their bank account. And that can be, a huge misleading error. So yeah, we really need that software going.
What financial documents do banks typically need when a small business applies for a loan or line of credit?
So I'll just go with the established business here. Typically, we need tax returns, year-end financials, and by that I mean P&L and balance sheet. And then if we're far into the year, we ask for year-to-date financials as well. And then for the owners, typically we need personal tax returns. And when we ask for taxes, it's typically 2 to 3 years. And then a personal financial statement, and that just tracks your personal assets and liabilities, not the business, because we will ask for the business balance sheet separately. And then for new business, obviously we would like to see that business plan and projections. And really, the other documents will vary compared to the request that you have. We need typically more information for real estate, but that's all things that obviously you iron out when you're talking with your banker.
Do you have anything to add to that one?
No, I don't have anything different to add to what Sydney said. If we're looking at doing a loan, it's basically the same information. We typically do like 3 years worth of tax returns for the business if you're existing. If you're a new startup business, we will also ask for personal tax returns, a personal financial statement, as well as the business plan. So very similar to the bank.
There are common misconceptions about grants or economic development programs.
Yes, I would say that the most common misconception is that grants are available to start a business. I hear that very frequently. People have an idea, they want to do something, and they just think that there has to be grants out there for me to do what I want to do, and that's not typically the case. Sometimes there are grant programs available to help with workforce development and training, things like that. But I have not ever come across a grant in my time doing this work to start a business. I guess that's about the only comment I have on that question.
Do either of you two have anything to add for that? Okay.
No, thank you.
What advice do you give a small business for growth or expansion? And we'll start with Cheryl.
Cash flow. Cash flow, cash flow, cash flow. And again, to look and see what if your employees have some room where they can take on extra duties so you're not having to hire new employees, which again is, cash flow. And that's just the main thing is, you've got to have the resources to be able to do what you want to do without not having sleepless nights on how you're going to pay for things.
Sydney?
I think Cheryl got it there.
Okay. Amanda?
I would just add that I think it's important to always be looking at your business plan and always be updating that document. So
Mhm.
you do have it ready to go if you need it for an expansion or maybe some additional financing for equipment or projects. Just keeping that document as up to date as possible is important.
Okay. Um, how important is a business credit score and how can business owners build it or improve it? I'll start with Sydney.
I'll be honest, in my time in banking, we don't really look at business credit score necessarily. I would say the main thing that we look at is historical and year-to-date financials to determine if you have the repayment capacity to take on new debt. Um, we do, though, pull owners or guarantors credit, and that does play a role in the overall financing package. How we kind of look at it is how an owner handles their finances can sometimes indicate how they're going to handle their business finances as well. It's not an end all be all by any means. There's things that come up in life that might need to delay payments or whatever it is, but my advice to that is on the personal side, make all your payments on time and don't get overextended in credit.
Do you two have anything else to add to that one?
No, I think Sydney did a good job with that one.
I would add from SCDC's perspective that we are usually in the space of looking at riskier loans where the banks sometimes won't finance something. So we do take a look at personal credit. But if someone's in that riskier category where they couldn't get financing through a bank to start their business or um, get some financing to help, we do take a look at that. It depends on really what the entire package looks like, as far as Sydney had mentioned, are you making your payments on time, or what's the reason why you might have something on your credit report that is negative or derogatory? And we go through and we kind of vet all of that information with the applicant, take a look at the business they're trying to start. And so for us, it's not necessarily a deal breaker because we are in the space of trying to help people start businesses, even if maybe their credit score isn't exactly ideal in the lending world, or they may have made some mistakes in the past, but they're things are moving forward and they're really wanting to start a business.
Um, how often should a business owner, be reviewing financial statements and which ones are like matter the most or should be reviewed the highest? I'll start with
Every
Cheryl.
month, every month, sometimes more than once a month. I might look at the accounts receivable every week. You come in every Monday, see where we're at, see what came in over the weekend, because that's what fuels your cash flow. And then you also need to make sure your payables are being paid on time so your vendors don't give you more unfavorable terms. You would try to, if you do have any incentives from vendors that say, okay, we're going to give you a discount if you pay in, 10 days or something like that, those can really add up. So it's really important just to stay on top of everything. I've also found, the smarter the business owner is, the easier my job is as their managerial accountant. So I, really like it when they're involved and try to stress having, monthly meetings going over the P&L. And you can't just look at your net income. We need to go, every single line item down the report from start to finish. The three most important, of course, are your P&L, your balance sheet, and then your statement of cash flows.
Do you two have anything to add to that one? Um, how can small businesses prepare for tax season throughout the year instead of just at the end of the year and kind of scrambling and being last minute? We'll start with Cheryl.
Well, again, I know we've said it 10 times today, but it's maintaining monthly books. It's so important that we are consistent, that we reconcile all of the bank accounts, the credit cards, as well as the loans monthly, because a lot of times loans are going to have, quite a bit of interest in there. Maybe the principal isn't so much. They go on different reports. The interest goes on the P&L, the principal goes on the balance sheet. So it's important to true those up so we know, where everything's at, and we can see the health of your business that way. If we do it monthly, then comes tax season, it's much more easy to make plans in your fourth quarter. We can maybe reach out to the tax preparer and say, hey, are we on track here? Should we make some estimated payments? Are we doing okay? You don't want to have penalties for not making enough estimated payments. Those are quite staggering. They can be, several $1,000s, and you don't even think of that. Also, if you have maintained good monthly bookkeeping, your tax bill should be less because they're spending less time doing your returns.
Amanda, Sydney, do you have anything to add to that one? Okay. I don't remember if I asked this question or not, but how can a business improve its chances of being approved for financing? Did I ask that one? No.
Nope.
Okay. Sydney.
So I've got a few points for this one. I would say showing consistent or increasing cash flow trends year over year. The importance of putting together accurate and timely financials when requested. Significant, or I guess sufficient collateral to cover the loan request. Those will be determined, at the time of your meeting with your banker. And then ownership and management experience is a benefit, especially on some of the bigger deals. And then another important one is to meet or exceed your down payment requirements.
Let's see. How should a small business separate personal and business finances, like correctly? We'll start with Cheryl.
They should never be commingled, because they're there are two separate things. You have your personal life and you have your business life. So it's the exact same with your finances. You should have separate accounts. You should have designated credit cards. You should keep everything separate. And definitely, we do not ever want to commingle in the accounting software because that's just a big, ugly mess. If you want us to track your personal, then we can set up, one software for your personal and then another software for your business. But they should never, ever even be together in order to need to separate them.
Do you two have anything to add to that one?
I don't. I'll just say when you're looking at financing, especially I would say personal loans, if you have business debt personally, it's in your name. And even if the business is covering the expense, it's likely going to affect your debt to income on the personal side. So I know sometimes it's unavoidable when you first start your business, but to try to keep those as separate as possible is good right out of the gate.
This one is Amanda, kind of specifically. How early should a business involve economic development when they are considering expansion or relocating to the area?
I think as soon as possible, because as I've mentioned before, we have a variety of resources that we can connect businesses to, as well as It's kind of project dependent as well, but what's the need? Are they looking for available space? Do they need to build? Um, there's just a variety of things along the path of opening a business even before or relocating that we can help with. So as soon as possible.
Do you two have anything to add to that one? Okay. Um, how or what role does like I guess for seasonal businesses more so, and you're doing like this off season or they're not open, how does that look for financial statements and baking and economic development and getting that kind of support? We'll start with Cheryl.
You mean if you're only open for part of the year?
Yeah, like you only are open 10 months out of or 8 months out of the year versus a 12-year business.
Hmm. Well, generally, you would try to find something in the other months to bring in some sort of money because, right, your bills are 12 months a year. So, I would say, it's important to figure out something to do in the meantime. Like a lot of landscapers in the wintertime, they'll do, snow removal or, some sort of um other, snow something. But yeah, you want something that's 12 months.
Sydney, do you have anything for that one?
Yeah, we actually do see a handful of seasonal businesses. Um, what we like to do or we can do is basically line up your payments with your income stream. So if you only operate 6 months out of the year, we can set your monthly payments up to fit with when your revenue is coming in. We don't love to do that because the payments are typically higher and there's a little more risk, but if it warrants that, we can definitely take a look at it.
Yeah, I would just echo that a little bit. We haven't seen that happen on our loan side, but could definitely be something that we could accommodate. As I mentioned, we usually live in the riskier space for businesses. So one thing we've done to help out one of our tenants is we've adjusted a lease schedule. So they have a slow time. When their slow time is during the year, they don't make lease payments. So as Sydney had mentioned, the payments the remainder of the year are a little higher, but it's just a better setup for that business. So and we can accommodate um, payment structures of that nature based on the business need.
Um, what common things come up when you're doing your taxes that would surprise most businesses or that most businesses don't think about? And we'll start with Cheryl.
What common things can come up in your taxes? Well, maybe some home office rent expense that you could take, you really kind of just putting it from one pocket into another. But that would be a CPA question to see if, it makes sense to do that. It seems like you're just moving it around, but it could be advantageous. Also, there are a lot of IRS expenses out there that maybe owners aren't taking care of. There's some, employee tuition reimbursements. If you have some younger employees that are going to college, you can help them as well as, get an expense for it. There's also some, you can do your personal health insurance that you might not think about. There's auto expense. Even though it's a personal auto, you are allowed to write off part of that business wise. So those are kind of a few that I would say to keep on, that we try and keep track of for people.
Amanda, did you have to add to that one?
No.
Um, Next one I have is what tools and software do you recommend for small businesses starting out? um, with their financials and what they'll need for the bank and what they'll need for SEDC. So Cheryl, we'll start with you.
Sure, I would say QuickBooks Online is probably the most affordable accounting software option. And within that, there are, 5 or 6 different levels that you can purchase. Some of them are very affordable. There's one called the Ledger, which is actually only even available to accountants, and it's only $10 a month. So if we have, a client that's really just needing to track revenue and expenses, but they're just starting out, then we would put them on that one. Then, it can go all the way up to enterprise, which would give you inventory tracking, invoicing, all of that. So I would say that's the best place to start.
Sydney, do you have anything for that one?
Nope, I also thought QuickBooks.
Okay. Amanda?
Yeah, I think QuickBooks is the most popular software for businesses to use. And then I would just echo again, as far as tools, just keeping contact with the Small Business Development Center and keeping that business plan up to date and accurate.
Okay. What can a business do today, or like this month or in general, to be in a better or a stronger financial position by this time next year? Like, what is one recommendation that a lot of small businesses don't do, but you think they could do to be better? I guess is essentially the way. Oh, sorry, with Cheryl.
I think it comes down to, again, being involved in your business. If you want to start a small business, you need to be willing to put in many, many hours. And that's the only way that you're going to learn it, is by being there. You can't just expect your employees to tell you, what's the temperature of everything. You need to be there and be doing it yourself.
Sydney?
I would say get really familiar with what a P&L and a balance sheet looks like. I know a lot of business owners that are really good at the trade that they're doing, but don't know the business side of it. Managing those expenses and revenue is going to keep you going, and you need to know what you're looking at. And don't just rely on other people to know those things for you. So ask the questions, get really involved, and get to know your business inside and out.
Exactly.
Amanda, do you have any?
Yeah, I would just add, Cheryl mentioned working in your business and being very familiar with it, but you also need to spend time working on your business. So kind of separating yourself a little bit from like the day to day, and then making sure that, as Sydney mentioned, you understand your financials and what they look like and where you want to go. And then taking an overall look at the big picture.
Okay. If a business owner only had or only set aside 1 hour of their day to focus on their finances and their financial documents, what should they spend that hour looking at or reviewing after their bookkeeper comes in or after they talk with the bank? And Cheryl, we'll start with you.
Well, I guess the simplest two would be accounts receivable and accounts payable. They're the most manageable. Anyone can understand it. There's really no training that would need to be involved in, how to read a report. I mean, you see who owes you money this morning, and then you see who you owe money this morning.
Sydney, do you have anything for that one?
I would just say maybe take a look at any abnormalities that are different from your day to day. Those should be able to stick out to you if you're looking at that, daily.
Okay. Amanda?
Nothing to add.
Okay. This will be the last question unless you guys have anything to add after. But if you could give one piece of financial advice to every small business owner, what would it be? And we'll start with Amanda.
Sure, thanks, Cadence. I was recently talking to an entrepreneur and he had made this comment, so I will share it with you. He said, data, data, data. The numbers tell the story. So always be looking at at your financial reports and understanding that will help you understand where your business is and help you make the decisions you need to make.
Sydney?
I'm going to give the banker spiel here. Stay on top of your bookkeeping. Look for an accountant early. You will learn really quickly when you need to borrow money in a hurry and you have no financials and they're just a mess. It's going to be very hard to borrow money. So keep up on that. Provide good quality financials and provide them timely to your banker.
Okay. Cheryl?
I would say meeting with your accountant every month and going over everything, line item by line item. You can't just look at your bank balance and you can't just look at your net income. You can't just look at your gross income. I have people say, "Oh, I made $5 million this year." Okay, well, what was your net? Because that's what matters, and what matters is everything that goes down the line to do that. And the most important thing is being in the office and being involved every day.
Before we end this, do you guys have anything else you would like to add or talk about?
No, thank you for the opportunity. This was fun.
Good.
Yeah.
Well, thank you guys so much for being the panelists. We'll post this video probably on our Facebook and kind of share it out to everybody. And if you're okay with it, we'll put your contact information for people to contact you. But thank you guys so much for doing this and have a great day.
Thank you.
Thank
Thank
you.
you.